Hello. Hope everyone enjoyed doing a manual tax return. I know this is a pretty simple example and maybe a little tedious to have you fill this out manually, but kind of gives you an idea what we used to have to do before TurboTax. So your completed tax return should look like what you're seeing on the screen right now. Oops, didn't mean to do that. Hopefully you can see. So the first part in here, you're just putting in your name and address, and then any, sorry about that, any dependents that you may have. So um, this particular tax return, um, this is for a single. So this is your filing status up here. I guess I should have started up here. Um, so you're filing a single return. So you would have needed to look at the documentation that I included, which um, included a W-2 form, which comes from your employer. I'm sure those of you who have worked have received these before. And from the W-2, you include what your wages, salaries, and tips, line one. So that's the $60,000. Then from Schedule B, which we'll take a look at next, you had some taxable interest, and that came to $500. And what this section is really doing is adding in all of your income. So not only did you have a salary here at 60, but you also earned some income from interest, and that's that $500. In addition to that, through your investments, you had some dividends that paid out $1,750. So that gets added to your income. And so you add all that together, and that comes to 62,250. So that is your total of the income that you earned for 2019. And then you bring that down because there were no other um, additions to that within this section here. So the 62,250 ends up dropping down to here. This is an important line item because this is what's known as your adjusted gross income, or your AGI. So your AGI is 62,250. Now you're able to take a standard deduction, and these standard deductions have increased significantly since the tax law changed in 2018. And for an individual, so for a single filing status, you're able to take a standard deduction of $12,200. And you have a choice of going to the standard deduction or itemizing your deductions. But most people are going to use the standard deduction because it's so high, and the itemized deductions are probably not going to equate to that amount. If you did have a lot of, let's say, medical expenses and other types of deductible expenses, then you could go through the exercise of going through all of the itemized deductions to see what that total would be. If it's greater than the 12,200 that you're getting through the standard, then you would take the itemized deductions. If it's less, then obviously you would go with the standard. So in this particular example, we're taking a standard at 12,2, so that goes over here, and you subtract the 12,2 from the AGI to come up with $50,050. Well, that's what's known as your taxable income. And as you can see, it's quite a bit, almost $10,000 less than the taxable income. The taxable income is what your taxes are going to be based off of. Let's take a look at the next page. So here we have the the tax that you are obligated to pay, that you should have paid, or need to pay if you didn't pay enough. And so if you take a look at the tax guide that I provided to you, it has a neat little table that allows you to just take the taxable income. So that was the 50,050, and you look over to the tax bracket that you're in. So this is the 22% tax bracket that you're in, and you multiply that, and that comes to $11,011. And as we talked about, since our tax system is a progressive tax, that's not the amount that you're going to be paying in taxes, because there are a couple categories before the 22% that you're going to be paying tax at a lower level. So what this tax guide does is it allows for that. So you take the $11,011 and it tells you that whatever this number is, you subtract out 4141.50 to come up with what your actual tax liability, what you owe in taxes, should be. And in this particular case, when you subtract the 4140 from the 1111, you get $6,870. We rounded up. So then you put that here, drop that down over here, keep bringing it down, and then you take a look at your W-2 to see how much your employer had withheld from your pay. And as it turns out, you had $8,000 taken out for federal to pay for your taxes. So $8,000 was pulled out. That's what you paid. And you owe $6,870. So you bring down that $8,000 to this line, and then you subtract what you owe, which is $6,870, from what you've already paid in, and that difference is $1,130. So $1,130 is what you overpaid. So your employer had pulled out more money than what you needed to pay the federal government, and now we're just truing up here at tax time. So the IRS will owe you $1,130. That's your refund. So if we take a look at Schedule B, we had a couple of things that we had to add to income. One is the interest that you had from your money markets and your CDs, and that was $500. And there's a 1099 form that that is sent to you that indicates that. By the way, those forms are also sent to the IRS. And then you had some dividends from your stock investments. So up here, your $500 came from Chase bank accounts that you had, money markets and CDs. Your investment dividends came from Schwab through a Schwab account that you had, so that came to $1,750. So when you drop that down, that comes to $1,750, and then you had the $500, and so those are the amounts that you put on the first page of your tax return. And there's some questions about foreign accounts that you don't have to worry about. So that's all there is to it. It's a very simple way to do your taxes. Obviously, this was a very simple return to do, not a lot of complicated issues to deal with. with the tax law change in 2018, they also tried to simplify the overall process. So they've made it a lot easier for most folks to do their taxes, which certainly is a good thing.